Hi everyone, welcome to this week's live stream. My name is David Jones and we do this every Wednesday at 12:30. If you haven't attended these before, the way it works is we'll go through the major markets, stock market indices, gold, oil, silver, Bitcoin, see what's been going on over the last week and what to look out for in the week ahead. I think it's been an interesting year, hasn't it? Because we had strength in stock markets beginning of the year, then we had all the tariff stuff with the big market sell-off, the likes of gold doing really well. Then over the last couple of weeks we've had the military situation between Israel and Iran, so we've seen plenty of volatility there. Then we have talk of a ceasefire, then it's not a ceasefire. Markets are all over the place, so loads of volatility. I must admit I found the last couple of weeks a bit difficult because the market has been up one week, up one day and down the next. But let's take a look at some stuff, because I thought what was interesting yesterday, the Nasdaq came within, I think it's 2 points of the official all-time high. So we had seen some of the European markets, such as the DAX, already moving to all-time highs after the big sell-off and the bounce back from April. But we haven't seen it in the US yet. So we'll take a look at those. I think that will be interesting if we see the likes of the S&P, the Dow, the Nasdaq move out to fresh all-time highs. What does it mean? Blah, blah, blah. Big move in oil beginning of the week on the ceasefire, down $12. I think it was on, is it Monday or Tuesday? We'll have a look in a minute. Anyway, blah. Loads to look at. Before we do it, let's just do our risk warning. Let's get that done and out of the way. It's a bit of a long one, so bear with me. Spread bets offered in the UK only and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 85.24% of retail investor accounts lose money when trading spread bets and CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. All information that is provided during the seminar is for educational purposes only. The presenter is not a financial or investment advisor and is not authorized to provide recommendations on any instrument of any kind as part of this presentation. The strategies showcased are applied on hypothetical scenarios. Any instruments that are mentioned throughout are cited only for illustrative and educational purposes. The webinar is not intended to be a personal recommendation or an offer to buy or sell any financial product or instrument and must not be construed as advice from the presenter. Capital.com does not represent that the material provided here is accurate, current or complete and therefore should not be relied upon as such. Any information that may be provided relating to past performance is not a reliable indicator of future results or performance. To the extent permitted by law, in no event shall Capital.com or any affiliate or employee have any liability for any loss arising from the use of the information provided. Any person acting on the information does so entirely at their own risk. There we go. Okay, let's have a look at these markets. I think there's lots of interesting things to look at the moment, and I think there's absolutely the argument for being a buyer or a seller in lots of different markets, and I think it all sort of hinges on what happens over the next few days or so. So I think it is going to be interesting. For me, I'm trying to be patient. I've got one trade open at the moment. I'm long platinum at the moment from last week, but otherwise I'm just waiting to see what happens next. But let's get into it. Let's start off with the Nasdaq. So the all-time high for the Nasdaq 100, the in-session high, so the official trading hours high, is from memory 22,222. Yesterday it traded to 22,220 in hours, so it came within 20 points. You can see it, here it is now. In the out of hours, it is at all-time highs. Okay, in the out of hours market, we've got 2 hours until official US trading starts, but it looks like a positive start. But anyway, to take a step back, why this is interesting. Here we go. So we had the old all-time high back in Feb. Then, of course, we had all the tariff stuff gets talked about. Markets absolutely panic, and we saw the Nasdaq drop from 22.2 down to 16.3. So what's that? An almost 6,000 point drop in the Nasdaq. So 25% plus drop in the Nasdaq, and then of course we had the subsequent bounce back And here we are, back to the old highs again. You know, traditionally, a breakout through all-time highs is considered positive. So I think it's interesting to see what happens. What day is it today? Wednesday. So let's see what happens the rest of the week up here. But if we start pushing through, continuing higher from where we are now, I would consider that a positive. Of course, you know, there's always two sides to every market. So if you thought, well, do you know what, this bounce back we've had, this is now a £6,000 point bounce back from the lows, is ridiculous, and the tariffs are going to put massive pressure on the US economy, massive pressure on the US stock market in the second half of the year, then this is a short selling opportunity because the market's come back to the highs from February. So if you were bearish, this is a gift from the trading gods up here. For me, the momentum is still up, so I still want to be a buyer. But it's a really interesting week, rest of the week ahead, I think. So if we flip it on the hourlies, you know, it had been, these US markets until the beginning of this week had been a bit sideways, you know, for a while. What I thought was interesting as well, you know, we had that, interesting and confusing, you know, we had that attack by the US on the Iranian nuclear bunkers over the weekend, and I was really surprised by the market reaction. I was watching sort of the weekend market predictions, Saturday, Sunday, you know, and it was like everything was going to be down 400, 500, 600 points. So this is Friday's close for the Nasdaq, last Friday, around 21,650. Sunday night opens at 21,380-ish, so opens down 250 points or so, and then never really looks back. You know, so a scenario that if you'd asked somebody 20 years ago, well, Israel is bombing Iran, Iran's retaliating, and the Americans have just bombed 3 nuclear whatever it is, that's not a recipe for a stable geopolitical situation, isn't it? You know, and you know, there are people at the weekend talking about the start of World War III and all of that, and the market completely shrugs it off. So this is Monday still, and is that Monday? By Tuesday, the market was trading above the Friday high, you know, so I think it's perhaps a surprise to a lot of people, me included, you know, how well the market so far, investors, have taken all of this in their stride. Maybe you think they're wrong, you know, if you think, well, they're being far too over optimistic and it's going to sell off, well, you know, let's see what happens. But here we are where we are. Let's flip it over to the hourlies. So this week, after that gap lower opening, there it is on the hourly charts. There's the gap lower on Monday, or Sunday night, I should say, and bang, 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 here we are. The market's still strong, you know, so it's risen about, 900 points since that Sunday night open. So it's a big move, isn't it? What's that in percent? 4%? Am I doing the maths right there? 10% is, yeah, it's about 4%, 3 or 4% since that Sunday night open. Anyway, so there we go. Strong markets this week, still strong in the overnight. It'd be a really interesting session today to see if those old highs get taken out properly. But for now, for me, you can't argue with the strength, the bounce back that we've had since April. So I'd be expecting these markets to move higher. If we look at the S&P, similar story. The S&P yesterday, I think, came within 50 points, there we go, of the old all-time highs, again from February. So again, not a million miles away. A strong week. These are the daily candles. Let's see how we get on, you know, or does the market start to roll over again up here? So that's why I think we've got an interesting week. So US market still strong. Do we get the breakout is the theme for me for the rest of this week. If you look at the DAX, I'm actually thinking about buying the DAX this afternoon. So the German DAX, this has been moving a little bit different lately to the US markets. You know, of course, again, we had the sell-off, the sell-off from March. It started in the DAX because of tariffs. The low was set in April, as it was with US markets, and bang, since then we've had the rally back. So the DAX got down to about 18.8 and traded as high as 24,500. So a big bounce back for the DAX. Even though US markets have been nudging higher for this month, for June, that hasn't been the case for the DAX over the last couple of weeks. You can see it's really stalled. And I wondered if the move we were seeing today, so we had this sell off for most of June. We had some strong moves this week. So for me, I was wondering, is the trade here, if we thought this was like downtrend for all of June, is the downtrend over with the strength we've seen this week? So we've had the strength this week, sold off a bit this morning, and we're just hooking back before we go ba-bang again. So that was one thing I was thinking about doing maybe this afternoon, is being a buyer of the DAX. I'm not so sure where I would put my stop, probably at least the other side of 23,400. These are volatile markets. If you look at today, the DAX has gone from 23,750 to below 23,500. So we've had a 250 point move on the DAX, and we're only just about halfway through the day. So I'm quite happy to give it a bit of room and see where it goes from here. But I think that could be an interesting market to watch this afternoon, the DAX, to see what happens there. So it's US markets and the DAX, I think, for me, are the interesting ones. Have a quick look at the Japanese market. I don't know. I mean, I would have been wrong on this. I was thinking, I didn't do it, but I was thinking the other week about going short, because I thought, if I take this back a bit, here we go. If you look at that, I was wondering, is this the Nikkei struggling once again with this sort of 38,250 level? And it's gone through it. So I'd have been wrong on that if I'd have traded it. So this is, it's quite a way below the all-time highs. The all-time highs were July last year. So that the Nikkei, the Japanese market, did not participate in the same way that we saw European markets and US markets late last year into this year setting new highs. But in the short term, it's still strong, isn't it? So for me, I suppose a lot of it depends on what happens with the US. If we see the US break out, we'd expect it to drag up these other markets as well. So for me, I'd probably be a buyer now, and I'd have been wrong on that short. So that's it. But for me, the S&P, NASDAQ, and the DAX are probably the more interesting markets. Let's have a look at gold. So gold has had a heck of a year. It's been almost a perfect storm for gold, really, because we had, from January, February, we had falling stock markets, tariffs, the threat of tariffs, so economic uncertainty. Of course, the ongoing situation with Israel, and then the Iranian situation, and just all of that, and then the Americans getting involved. So it has been a perfect storm for gold this year. We saw the all-time high for gold in April, traded up nearly to 3,500. We're 8 cents away from 3,500. So let's call it 3,500. It came into the year, where did it end last year, gold? Around 2.6, and it's currently, 3.3. So it's up 700 points. So it's up 25% and a bit for the year to date, even though it hasn't done much over the last couple of months or so. So it's interesting. The big trend is absolutely up on gold. So if we saw a much bigger dip, let's say everyone decided that everything in the world was absolutely fine, and the price of gold dropped to 2,900, that would still be a buying opportunity within that bigger trend. So it's been a bit sideways since that all-time high in April. But again, I wondered, in the short term, is there an opportunity here? And the level, so there we go. That's what it looks like on the hourly chart. And I was just wondering, we had this low early June around 32.93, 3,293. The market rallied to 34.50. Yesterday it came back down to it again. So I thought, well, that's an interesting level. A level that was an important short-term level in the past. We've seen the market rally. Are we going to see this level be a base again? So for me, if I was a buyer now of gold at 33.24, I'd want my stop the other side of 32.90. So I think that's an interesting one to watch. And if that falls, then we've got bigger support down here. So it's all a bit sideways the last couple of months, but up until then it had a great year, and it's still up 25% odd for the year to date. So quite interesting to watch these old lows on gold and see if it bounces. But I suppose if we saw stock markets, US stock markets, break out, I would guess that is really going to dampen the appetite for gold. But let's see. If suddenly everyone sees the newspaper headlines, S&P at all-time highs, you would think that many investors think, right, I need to switch out of gold a bit. let's see what happens. Let's see what happens over the next week or so. So that's gold. Silver had this great run and has broke out. There we go. And as we've often seen with silver, it is a funny market, silver. We had a breakout in October last year. The old highs were up here, wherever it was, 32.50, broke out, holds above it for a couple of weeks, and then just goes nowhere. And so far, at least, we've seen the same thing again. We've had the old high at $35. I think then it moves out to the best levels since 2013. And it's just drifted back again. But as a trend follower, I'd have to be a buyer of silver because the trend is up. It's just still a bit drifty at the moment. So, some levels I would be watching. I suppose the old breakout level, $35, would be one. So I would absolutely still be a buyer. I might want my stop the other side of 34. But a bit boring over the last week. But let's see what happens in the week to come. But that, it is an odd one, silver. It doesn't move. It hasn't moved anywhere near as gold has moved over the last 10 months or so, where we've had that great trend. It sort of breaks out, then stutters, drifts, and then does nothing for a long time. Let's see what happens with silver. The other interesting market, this is another one where I thought maybe there's a trade today. I was going to say unlucky, but it's never luck, is it? I was short oil the beginning of last week. I was short oil. So I went short because of how it opened on the Sunday night, which would have been there, I think. So I think that was when Israel started bombing Iran over the weekend before last. And the price of oil gapped open, there we go, on the Sunday, but it didn't take out the Friday's high. And I thought, well, we've had this move, had this action over the weekend, which is a complete surprise. Well, maybe not complete surprise, I don't know. But the market hasn't reacted how you'd thought it reacted, so maybe the right trade is to be short. So I went short on Monday, and it did move in my favour for a bit, and it was all fine, blah, blah, blah. But then it started moving higher as the week went on. I got stopped out on this Sunday night's open, so I got stopped out of my short at about 76. And then what did the price do? All the way down to 64, 65. So, it happens. Now and again, you get stopped out at almost the extreme of the move, and the market ends up going in your favour. That is not an excuse to not use stop losses, though. But it's just one of those things. So, I'm not bitter about it at all. So, but I thought it was interesting, given the move in oil now. So from Sunday to go from 77.60, so Sunday night, what time is that? 11 o'clock Sunday night. And yesterday, how low did it get yesterday? 63. It's a $13 range. It's almost 20% on the day. Anyway, I just thought perhaps the sell-off's been overdone now. So for me, I'm wondering, is the trade I would do on oil now be a buyer? Is perhaps one thing I'd be thinking of. So it hasn't done that much over the last 24 hours. And it is still a bit weak, over the last few hours it's been a bit weak, it's still a bit drifty. But I think that's maybe an interesting market to watch to see if we do get some stability here, do we get a bit of a bounce back in oil to at least 70 plus, or actually has it decided that it's massively overvalued and down we go again? I don't know. Let's have a look at the big picture for oil. Clearly very, very news sensitive. That move on Sunday put it at its best levels, not for the year so far, only back to January levels. So back to where it was in January. And back then, fair enough, the highs were just shy of $80, so you could argue, well, it's just continuing the downtrend, which again is a completely valid argument, and maybe bang, back down we go to 55. So it does demonstrate how in lots of these markets at the moment there are strong arguments for being long or short, which is why I've not done very much at all the last couple of weeks. But I do quite fancy perhaps being a buyer of oil if it shows a bit of stability down here, to see if it flips its way back up to 70s. Let's see what happens. That's that. We did oil, we did gold, natural gas. I haven't looked at this much. Natural gas, it had a bit of a run, and then it's given it back again. I would say, natural gas, I think, is, can be a volatile market. clearly it was crazy volatile about 3 years ago when we saw it up to $10. Then it went all the way back to $1.50 or thereabouts, beginning of last year. I mean, it's so how it's moving now. It doesn't look that volatile, but it actually is. If you look at the range from March it was as high as 490, and then it's back to like 3. That's a big move. It's like a 40% move. So even though historically it doesn't look now as volatile, and it's not as volatile as it used to be, it's still a pretty volatile market. Anyway, so I don't know. I would be a buyer. The question is, where would my stop go? If we have a look on the hourlies, we had a good trend up, marched it all the way up, and it's marched it all the way back down again. So for me, still weak at the moment. We have seen over the last month or so 335 or thereabouts be support. So perhaps there's the argument for being a buyer there if it drifts down to there. So an interesting one to watch. Bit of a crazy market, natural gas, but yeah, let's see what happens. And the dollar index, let's have a look at that. I think this is a really, for me, it is quite a confusing market. So there's the bigger picture of the dollar index over the last 4 years. So we had a great trend from 2021 into October 22. Then we have this big sideways period. And then this year it starts breaking down, right? So it breaks some levels, which is typically breaking through previous lows, which is typically considered negative. But it breaks, and then we never really get any follow through, and it rallies, then it breaks again, and there's no follow through. So it is absolutely edging lower, and you can see by the trend line I've drawn here, the trend for this year is absolutely down. So the textbook approach is to be a seller of strength in the US dollar. The aggressive idea, because we're not getting much traction on the downside, is to be a buyer with perhaps a stop below those middle of June lows and see if it recovers. But it's really, I think, quite a mixed market, the old dollar at the moment. An interesting one, but because it's sort of flip-flopping around so much, when you look at markets like, or when I look at markets like pound against the dollar, they're a bit flip-floppy as well. We have, the trend is absolutely up on pound against the dollar, the same way that the trend is down on the dollar index. But again, it sort of breaks out and then it falls back, and it breaks out and falls back. It's trading now pretty much where it was at the end of May. So we've had a bit of volatility. Yeah, I'd agree. That's a good point, Red Rose. I would actually agree with you there. Short dollar seems a very crowded trade. Yeah, given what's going on in the US, everyone thinks the dollar's doomed, and it has been under pressure, but there's no real momentum. And perhaps if we do get a rally, suddenly there's a whole load of people looking to cover their shorts. I don't know. Let's see. But it's interesting. Again, it's interesting, but you could argue it both ways. But no, I would agree with it being a crowded trade. And there's pound against the dollar. So the trend is up, but again, because of this dollar flip-flopping, we're seeing flip-flopping in, the pound, the euro, all that sort of stuff. So that's it really. I think if there's any stuff you want looking at, put it in the chat. I saw that somebody had mentioned AMD, so we'll have a look at that in a second. But I think it's a really interesting week, even though perhaps there's not that many trades for me to do. I think this afternoon is interesting. Do these US markets, and the NASDAQ, even as we speak, is setting a fresh high. Do we see a real break through the previous highs for these US indices? And they're getting, yesterday they got very close. Today in the out of hours, the NASDAQ is through. I don't think the S&P is quite through yet, but we're getting close. So that's going to be interesting. Do we see a bit of a bounce back for the DAX after being under a bit of pressure this morning? I think that's interesting. And oil, dropped $12 yesterday because of the threat of peace. But has that been overdone? Do we see a bounce? And gold, that 32.90 level has continued to hold. So lots to watch. And like I say, I've been a bit confused by it all the last few weeks. And I think if you're, well, for me, if I'm confused, then it's taken me a few years to learn it, but do nothing. Wait for it to be a little bit clearer. So let's see what the rest of today's like. But let's have a look. Stanislav says, let's have a look at AMD. AMD Is that advanced micro devices we're talking about there? I think, isn't it? Is that advanced micro design? Oh, hang on. Advanced, I'm sure it is. Micro devices. Yeah, that's the one, isn't it? Let's add that to our charts and have a look at it. So you're saying, what do you think about after the share price passed $135? Let's have a look at that. Let's flip it. Oh, that is the dailies. Oh, it's good. It's interesting, isn't it? So I think the bet here is so that has been in a downtrend since March last year. So so the bet is, do you think that downtrend's over? I think that's what I would say it would be my reasoning or my thoughts on this. So do I think the downtrend's over? So if I thought the downtrend's over, then I want to be a buyer. Then the only question is, so I think, okay, there's a new trend starting in AMD. I want to be a buyer. I would probably want my stop the other side of these lows, which are only from a month ago, but they are quite far away. They're $30 away. Or, because again, there are two sides to every market, you could say, well, okay, it's been in a downtrend since March last year. This break, it is eventually going to run out of steam and it's going to sell off again. So, an interesting one to watch. What would I do? I don't know what I would do. I think I'd probably be a bit on the fence at the moment and see what happens. But you could absolutely make the argument, look, the downtrend is over. I want to be a buyer. I'm going to jump on this new trend for AMD. So for me, I'd say it's a bit too early for me, for the way I would trade off the dailies. A bit too early. But, yeah. Interesting one to watch. Let's come back to it next week and see what it looks like next week, I think, if that's all right. MINASX, please. Right, I'm not quite sure. What's MIN? Mineral Resources. Is this it? Mineral Resources on the Australian Stock Exchange, I guess you're saying there. Let's have a look at that. Mineral Resources, ASX. If that's the right one, that looks like just a downtrend, doesn't it? It's been sliding since Jan 23. So we're two and a half years into the downtrend. So it's gone from just under 100 Aussie dollars to 20. So, and the temptation is, I think for all of us in the beginning, or even not in the beginning, even maybe for longer than that, the temptation is we see a market that's falling or a share price that's falling, and we think, well, how much lower can this go? And of course, it can still drop another $20 from where we are now. So for me, the thing I've learned over the years is to absolutely go with the trend. So for me, I would be a seller. In a nutshell, I'd be looking to sell short. Yeah. So we've had a couple of months of a bit of a bounce, but historically this thing bounces for a bit and then boom, away it goes again. So for me, I wouldn't be in a hurry to be a buyer. If I was a buyer for whatever reason, then I would want my stop the other side of that low in April, and if it breaks that low, I'd bail out. So about 14 Aussie dollars. But for me, it's interesting, but I would be of the opinion that we've got lower highs, lower lows. The trend is still down, just because we've had 2 months of the share price going up a little bit, it hasn't changed the trend for the last 2.5 years. So yeah. So that's what I would be at the moment. So not of much interest to me at the moment. So the sort of stuff I buy, and again, of course, this isn't financial advice. I do investing as well as trading. Aviva, I bought that just this week. Aviva, the UK insurance company, because the trend is up, and and it's broken out through all-time highs, and I'm speculating, is it going to go a bit higher? And I've had BATS, that was another brilliant one. I've been in those for ages, and they're starting to stall a bit. So the sort of stuff I look for is stuff like this, where I want to try and buy into an established trend. Where has it gone? BATS has been a great trend over the last year or so, and it did hit multi-year highs recently. And I wonder if is it going to struggle again? But ones that have good trends over time. What's happened there? It's all disappeared. Anyway, there you go. But no, interesting that. But for me on that min ASX, it's still a bit too downtrendy for me at the moment. let's come back to it maybe in a few months and see what it's doing then. All right, otherwise we're done, aren't we? This Nasdaq is on a right old move at the moment. So where did it finish yesterday? Let's have a look. What was the close last night for the Nasdaq? What was the date yesterday? 24th. So 24th of June, and the close was the official close. There we go. 22,181. All right, so at the moment it's 100 points higher than yesterday's close. So I think it'd be interesting to see if it powers higher again. But it is now. It's set. If we stay where we are now or higher for the next hour and a half, it's going to open at fresh all-time highs. So interesting to see what happens. But yeah, an interesting week ahead. And of course, if you don't know, it's perfectly fine not to do anything. I know sitting here doing a webinar for a broker, I should be saying trade, but sit on your hands for a bit. Wait till it's all a bit clearer. Let's see what happens. Okay, we'll wrap it up there. I'll come back again next Wednesday, see where we all are then. So in the meantime, good luck with your trading. Thanks for coming along. If you can click on like and all the usual YouTube nonsense and subscribe if you're not subscribed, that'd be great. Oh, I won't do it next week. I'm not here. I'm on holiday for 2 weeks. There you go. It'll be 3 weeks. I'll be back in 3 weeks' time, and we'll take a look at it all then, and perhaps the Nasdaq will be 10% higher, oil will be $100, and gold will be 4,000. Let's see where we are in a few weeks' time. So until then, good luck with your trading, and see you next time.